Hey fellow Forex traders, this is Mark from TradeDeskPro.com. What is TradeDeskPro? It's a technical analysis and trading academy for the financial markets. This is the first video that we're recording. So maybe it's better to introduce ourselves a little bit. So who are we? We are a team of 11 traders. We all use different methods of analysis. If you go to our website, you can see about us. You can read all about us. Some people are so smart here that they still have their stuff here in Latin. I haven't translated it yet. But this is all coming soon. We plan to launch in the next few weeks, 4 to 6 weeks, I'm guessing. We'll keep you informed. Before we go any further, we have to show you the risk disclaimer. Trading Forex is a high-risk investment. I will leave this up for like a few seconds so you can pause the video and read the disclaimers, especially any opinions, news, research, analysis, prices, or other information contained on this website and in this video, by the way, is just general market commentary and does not constitute investment advice. So everything I say, take it with a grain of salt, or if it works and in a week or two you can say, hey, Mark was right, then let me know. Okay, this video will be a special, so to speak, about euro dollar, and I'm going to make a top-down analysis, so starting with a monthly chart. And since this is like a teaching moment too, I will start with explaining what all those lines are. By the way, the way that I trade is with pitchforks and support and resistance levels, Fibonacci levels, slope analysis. That's my specialty, or what works for me. So other people in the team use different methods, and that's the beauty of it. What we plan to do is to put all those different methods of analysis together and try to see, okay, what's a high probability setup. Okay, so let's start. We start with the blue parallels. What is this? So parallels is equidistant lines, of course. I drew this first one from here, and then I just copied it. I just took the line, moved it here, and it's a parallel. And it seems to be working really well. Relatively speaking, of course, I'm well aware that price went above here, but that's actually maybe not a bad thing, because price is going below here, so there's an equilibrium. You know what I mean? So price went above the line, came back, price went below the line, and should go back up. That's my assumption anyway. So everything you will see in the next few charts, I'm bullish on euro dollar. There are some levels, invalidation levels, where I'm no longer bullish, and we're really, really close to it. But as long as we are above it, I am looking up. Okay, a few reasons for that, and through the course of this video and going down the different time frames, you will maybe hopefully see what I'm talking about. Okay, so what's next on the chart? That's the fork, an Andrews pitchfork, right? It starts at a high It encompasses price within the fork, and preferably price moves between the lower and the upper parallels and the median line. Now, when is a fork valid, or when is a fork usable? That's when the median line has been touched, price went to the lower parallel, turned around, and went back to the median line. That's one of the, I wouldn't say rules, but you know, one of the, how shall I say it? One of the indications that price is adhering to that fork. Okay, it's a downsloping fork, so we're still bullish. We're still actually bearish within this fork, unless we move out of the fork. Okay. Now that doesn't mean this is a monthly chart. That doesn't mean that in a bearish environment we can still make money. The idea is that price, since it's been moving further and further away from the lower parallel, should go back to the median line, cross it, and go to the upper parallel. That's the idea anyway. All right, Fibonacci. As you can see, the Fibonacci levels from the move up from here to here, and Fibonacci levels from the move down from here to here, assuming that this is the low, of course. And then we have an interesting confluence, and I like those confluences. In this case, the 50% from the move up and the 50% of the move down. So this is a level I'm watching. Another level is, of course, a 38.2. And why? Because I've drawn this green line here, which is like a pivot for me. So as you can see here, price never closed above it, then went above it, and the green line was support, went up, green line was support, and so on. And you can see it, here further. In this case, price went below it, went back to it. So for me, this is an important line, which I want to keep on my chart, on a monthly chart. What other lines are there? An extension. All right, so if we look at this extension, how shall I? Hang on. Did I mark it down? One second, please. It's always so hard to see. All right, I see. Okay, so this is an extension from the entire move up, the entire move down, and this is the 61.8. I love that level. I'm not saying price will go there in the next next 2 months. That's virtually impossible. But I like to know where it is. It was resistance here, so price actually went to it. So I like to know where it is. Anyway, then those little red lines. This one, it's a little bit difficult. That's why I drew 2 of them. I like daily reversals or monthly reversals, or in this case, because it's a monthly chart, price usually goes back to those levels, those reversal levels. Now, because of this monthly green, in this case, see-through or hollow candle, there are 2 levels that I marked down. This one should actually be a green line also, which I also would like to know where it is, because it has been support and resistance lots and lots and lots of times. For me, price has a memory, even if it's years and years ago, but it shows that price has a memory, because it was support here, it was support here, it was support here. If you have several instances where price is respecting that line, then I want it on my chart. Okay, this one is maybe not as important as this one, but anyway. All right, then the blue channel, right? So we've got lower and the upper parallel of the channel, so to speak, of the bigger channel, and then we have this one. And why do I like this one? It should be really clear. It was resistance here, went through it, went back down, and the bottom of this channel was support. Here, the top of the channel was support. Here, was support, going through it but never reaching the bottom of the channel. Here, the bottom of the channel was support. So it's pretty important going, into the future. And that's exactly why here at this 38 fib, I've drawn a possible price target, just so I know where it is. Okay. Maybe another interesting tidbit is this red line. This is actually the 1997 August low, the same as the green line. Price here has never closed below it, and if you go to a line chart, then you'll see what I mean. Price is still above this red line, which is, for me, like a line in the sand, as we've talked before about me being bullish, and that's the line why I'm still bullish, basically. All right, let me put this back to a hollow candle. I know this is taking a while. I'm just trying to, for the beginners, to explain how I think, what these lines are. There's always, beginning traders hear from other people like, okay, if you draw enough lines, price will probably go to some line. Sure. I mean, you can overdo it, and I'm at the verge of overdoing it on this chart, but this is for educational purposes, just showing, okay, analyze the chart, look at price, where does it stop, where's support, where's resistance, look at the channel, stopped right here, and it stopped right on this lower trend line, actually. So it's uncanny how price knows this trend line from the year 2000 going to 2015, and if you would have bought this trend line, you could have made what is it, 1200 pips, so every line is important, in my opinion. Okay, then, oh yes, why are these hollow candles red? It's because I wanted to show you something else, how price has a memory, and price movements also have a memory, and that's why I copied this. And if we put it on here, and you can see that lows and highs, kind of match up. That's also an indication, and why I'm bullish is if this fractal or analog or however you want to call it is valid, then yeah, there's a good chance that price will go up, right? Okay, I'm gonna leave this here. That was it for the monthly chart. You know, the other ones I will go over a bit quicker because actually I kind of explained all the lines. So if we go to a weekly, same thing. Trend lines, they're all parallels from this one. Matching price here, unbelievable. In addition, I've drawn a fork, which also has been, you know, support and resistance a few times here. It's important to know if you draw a fork, the lower parallel was respected, went back to the median line, the fork is valid. You want to know where the median line is. Okay, so that means for me on a weekly chart, above the median line, then, you know, step on the gas, because normally if price goes above the median line, goes back to the upper parallel, which in this case, you know, could be anywhere between 120, and if it goes faster, 122, 123. It's a stretch, but anyway, not really a stretch, because if you look at what price did here in 2011, over the course of 4 months, it rallied, how many pips? Hang on. 129 to 148. That's 1900 pips in 4 months. So still possible. And that's why we come to the next, and this is some analysis of mine. You know, if you look at the highs here and here, that was exactly 160 weeks. Same thing here. I mean, okay, it's 1 or 2 weeks or 4 weeks difference, but you know, you catch what I'm getting at. 160 bars. So, you know, the next 160 bars, is it gonna give another high, or another lower high, so to speak, which might as well be at 128.80. Who knows? Yeah. Okay, wishful thinking. This is, you know, an interesting tidbit, so to speak. Okay. Yeah, you see here again a channel, equidistant lines, support, resistance. Very important. We'll see it on the daily chart too. Did I forget something? I wrote it all down, what I was gonna say, but okay. Then the daily chart. You might have seen this about a gazillion times on Twitter when I posted it. So now you know where what those lines mean. This fork is actually a modified shift fork, which is a variant of what Andrews developed, and Peter Schiff perfected it, so to speak. So this median line, support here, support here, support here, resistance here. So median line, I want to know where it is. Okay. Then within the upper boundaries of a fork, you can draw equidistant sliding parallels, as it's called. I kind of like this one, the red one, because it has been, prices kind of respected it. You know, of course it traded through it here, but here respected, and yesterday respected too, basically. Okay. All right. So what am I looking for is, well, I'm bullish, right? So what I also note down on my chart is when the yearly open is. Price has a memory, and price always wants to test important levels, and a yearly opening price is also an important level. So what am I thinking? First of all, I think price will test the yearly open again and then go up, or, and I will zoom in a little bit, or we have this daily reversal level here. As you can see, price went up the next day too, and now price has to test or let people in, because you know, other people might say, okay, that's a supply level. I don't know anything about the other terms or what other people call it. For me, it's a reversal level, and it will be tested. So 104.86 is an important level to watch tomorrow, or not tomorrow, it's Saturday for me now, so it's going to be Monday. 104.86 is a good level if we get there to get long. Yeah. Okay. Then RSI levels. I also like to draw trend lines on RSI levels and horizontal lines, so to speak, because you can see, okay, here it was resistance, support, support, support. So this level is kind of important, and we're right there. Okay. All right, then a 4-hour chart. A lot less lines. A lot of people are going to be happy. So this is the, oh, sorry, I was going to go back. Oh, no, I wasn't. 4-hour chart, a fork that I like, because here price tested the median line, should go down and test the lower parallel, which in this case is the 2017 year open. Okay. There's another reason why I don't like this fork, is because it's really steep, right? So it could be, if price goes below the 2017 year open, that I would change it to here, and then of course we might see levels below 105 before we go up. But let's see. Okay, I'm gonna just assume that price is gonna go up in a way, in a steep way, right? And what are my targets? Well, 4-hour reversal levels here, and let me scroll out a little bit. Of course, prices, where prices make reversals are important too. So here was a reversal, here it was resistance, here it was a reversal. So this level is also important, and that's why I put a target here. Okay, same as here, it's a 4-hour reversal. So next target would be 110.51. Okay, so you catch what I'm saying? Okay, then same thing. Pitchforks can be used on every time frame, and I really mean every time frame, also on the 5-minute chart. I always say, draw as many pitchforks as you want on any time frame, because it gives you an indication of whether you're still right in your trade or when you're wrong. It's your money. Use any method possible to preserve your capital. All right. So you can keep thinking, oh no, it'll go back up. If you think that too many times, then you won't have any capital left to deploy when you are right. Okay. Now, having said this, you do see that price went below here and here. End of year shenanigans, I call it. You know, low liquidity periods make for moves that are just BS, so to speak. Okay, so we're gonna ignore this, and I'm gonna keep focusing on this fork, because this is one reason, and the median line has had some interesting resistance points. Okay. All right, so what am I thinking? Next Monday, like I said, price to the year open, or a little bit lower to, here is another hourly reversal level, now that I see it. So what I do is draw a line, and usually before I trade, or before on Sunday, I write down all these levels. So I know, okay, you know, I'm not going to panic. And if I'm long here, I'm not going to panic if price still goes down. I'm only going to start panicking is if price goes, first of all, below 105, which is a psychological level, of course, and this 104.85 level we talked about. Okay. All right. Then I hope this was kind of educational for you, and let's hope that my analysis proves to be right, and let's make some pips. Oh, maybe one last thing. So price doesn't go up in a straight way. So this is what I'm thinking. If price goes to the year open, then it goes to this level, then back to the sliding parallel here, which was support here, 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 resistance here. So I'm hoping it will be support here and going up from there, crossing through the median line. Okay, that was it. Thank you for sitting through this video. I'm not sure how long this is, but thank you. Have a great weekend, and good trading on Monday.